Hello guys, welcome to Candlestick Patterns video, how to spot reversals in the market. Before wasting any time, let's go to it. Candlestick. What are candlesticks? Remember when we talked about, when we were doing the MT4 video, we said that the price can be represented in three different ways, either in bars, in line, or candles. And we said we are going to focus on candlesticks. Why? Because this candlesticks will be the major part of us having to analyze our major way of analyzing, or the way of analyzing the market will use candlesticks most of the times. I mean, most of the time. So let's get to it. What is a candlestick? Let's say you are in a market, the market hasn't yet opened. Then here meaning that this means that the market is neutral. If the buyers comes in with a pressure in the market, they will push the market to go up, right? Then the blue candle will appear as we customized our candles. Then this candle, the bearish candle, will appear if the bulls have a pressure in the market. Then if the market opens and the bears, they have more pressure than the bulls, they will push the market to go down. Then this candle will also appear. Let's go to it. What is a candlestick, by the way? Let's try and name the parts of the candle so that when we move on, we can understand what is it that we're talking about. We have a bullish candle and a bearish candle. This is a candle, but what does the candle consist of? It consists, the blue part that you will see in the candle, we call it a body. Because it's a bull candle, it will open right here, the below. Then when they have a pressure, when the bulls have pressure, push, then it will close here. This is a candle open, this is a candle close. Let's talk about wicks now. These areas. Why do we have wicks in the candle? Or in a candle? I mean to say, sorry about that. Why do we have wicks? This is because when candle opened, when the bull candle opened, it went down. It was not a bullish candle. It went down to be a bearish candle, but the bulls at the low, this is what we call low, at the low, the bulls gained more power against the bears. Then the bulls gained power until it will open as a bull candle here, as a bullish candle here. But they need to be traces. They must be traces. This tells us that at some point, the price came to this level and went up. Right? They pushed, the bulls pushed. It didn't push and closed here. It even pushed higher to this area, is the reason why we call it a high. It even pushed higher to this area. When it reached this area, then the bears came in with a pressure up to this level. Remember I said we said that each candle represent its time frame. Maybe if this was an 1 hour candle, it means that within that 1 hour, this is what happened. The bears came in, they pushed it, then the bulls came in and pushed it further. They cancelled what was printed here as the bears printed their red candle. Then they started pushing it higher. Then they reached this level, this high area. Then the bears came in. By the time this candle closed, it means that 1 hour was finished. Is the reason why it had to close at this level. Then we call these areas, this shadow or this tail, wicks. Some people, they call it shadows or tails, but we prefer to call it wicks. Let's go to bearish candle and see the difference between a bullish candle and a bearish candle. What happened is that before the market opens at this point, the same applies. It means that the bulls had power to push this candle to high to this area. Then the bears came in. When they came here, they pushed it further down up to this level. Then the bulls came in to this level. That's when the candle closed. If this candle represented 1 hour time frame, after an hour. Let's see the difference between the two candles. The body, they are the same. The wick, they also have wicks. Low is where the low is. The high is where the high is. The only difference between a bull candle and a bear candle is the open and close. Because this is a bear candle, it means it will open high and close low. Because this is a bull candle, it will open low at this point and push and close high. That is the difference about the two candles. Before wasting any time, let's go to candlestick patterns. Why we should buy or sell the market. We have this reversal candlestick patterns that we wait for in order for us to come in the market, because you cannot just see the market going up and say, I'm coming in up. You never know when it will come down. So this will help us. We wait for market to go up and come tell us that it is ready to go down, then we sell. And when the market is going down, we wait until it tells us it is ready now to go up, then we buy. Right? I hope that makes sense. We have these different types of candles that you need to maybe keep in mind. We have doji, hanging man, shooting star, hammer, dark cloud cover, piercing pattern, dragonfly, inverted hammer, doji repeat itself. We have harami, which bullish engulfing pattern, bearish engulfing pin bars. We have 3 white soldiers, 3 black crows, bearish kicker, bullish kicker, morning star, shooting star, or evening star, as they call it. So let's see, how does these candles look like? Shall we? Doji. In a bullish market, this means that when the prices are going high, we wait for a signal to tell us the price is ready to go low, to go down. We cannot just enter here or enter here. We don't know when it will turn down. So we wait until the price tells us, I'm ready to go down, then we go down with it. What happens, this candle will print. As we said, the market will either push up, then come push down up to this level. Then it will create a candle without a body. Sometimes with a small body, but we prefer a candle without a body in order to call it a doji. What are the characteristics of a doji? A doji candle, it has almost wicks of the same size. It has wicks of the same size and a small body or no body. That's a doji candle. We don't just sell every time when we see a doji candle appearing. We wait for a confirmation candle. A confirmation candle, I mean a bearish candle, to appear if the market was going up, if we have an upward market. Then we wait for confirmation candle to tell us that the market, yes, is ready to go down. We know that the market, we anticipate that the market will go down by seeing this candle being printed. Then after seeing this candle, we are now the market has now confirmed to us that it's ready to go down. Then after confirmation, that's where we sell. One thing about selling and buying, at this point, we are only focusing on candlestick patterns, but there are other factors that will affect us, that will tell us that, yes, go sell. We don't just sell by seeing these things. Okay, just to explain this part. When you sell after the confirmation candle is closed. You sell. Your stop loss, your target, or your risk, I mean to say, how much you are willing to risk will be determined by this. You put your stop loss here. Then this area, maybe this length, will be your pips. What you want to gain more than what you lose. Then you will target maybe somewhere here. Let it be 1:2 at minimum. We can accommodate 1:1.5, meaning that if this area right here, you are willing to lose maybe, let's say, $1 here, at least make $2 or $1.50. I hope that makes sense. On a bearish market, when the price is going down, we wait again to see this candle being printed. Then after, wait for confirmation candle, then you buy. Let's see another candlestick. Hanging man or inverted hammer. On a bullish market again, we wait for a bullish market to give us the signal, to give us the indication that I am ready now to turn down. If not doji, you will see this kind of a candle. The most important thing is to recognize the shape of candles. You will see this candle by seeing this candle, you will wait to see a confirmation candle appearing to appear. You'll wait to see confirmation candle to appear. After you sell the market, your stop loss level must be at least half your target. It means that you must target at least twice minimum, twice the amount that you are willing to risk. Remember how to calculate pips, how to calculate the pip value, how to calculate the lot size. Remember that video. Please go back and understand that, because this is the application of it now. You have to apply that skill here. Then on a bearish market, you wait to see the similar candle. Okay, the argument can be like, okay, this is an inverted hammer, this can be a hammer, it doesn't matter. They just all mean the same thing, by the way. They mean the reversal part of the market. So that's what we want to know. So you wait for confirmation to tell you that the market is ready to go up. Then you buy here, your stop loss here. You target at least 2 to 3 of what you are willing to lose, right at that point. Another candlestick pattern, shooting star or morning star. On a bullish market, you will see this kind of a candle. You will see this candlestick pattern formed at this point. We call it a shooting star. Before even, okay, what are the characteristics of a shooting star? Small body, same size of wicks, not too long, but similar, same size, short body. What you want to see, confirmation candle, then you sell. As easy as that. What you need to do is to take your time and try to memorize these candles, write their names down. After writing their names down, draw them without having to look at them. And that will make sense. Within, maybe you can take 5 to 10 practices. Then after, you will understand these candles. Then you buy after confirmation candles. On a bearish market, you wait to see a morning star appearing, confirmation candle, then buy. Here we sell, here you buy. Let's see another candle. A hammer and inverted hammer. This is more like a remember what we talked about. The argument can be about a hanging man or a hammer. To me, they make no difference. It's just the shape, the size of the bodies. Okay, let's go back. A hammer looks like a 5-pound hammer. You will see this shape forming, this shape being formed here. You will wait for confirmation candle, then you sell the market. On a bearish market, inverted hammer, confirmation candle, then you buy. Dark cloud cover and piercing pattern. On a bullish market, you want to see this candle being formed. By dark cloud cover, this means that it's a bad luck. It was a bullish market, but being covered with a bearish candle. So you need to see this type of a candle being formed and wait for confirmation, then you can sell your market. On a bearish market, this will call it a piercing pattern. The market was bearish. Then there comes a bullish candle. By piercing pattern, we mean that it was bullish, maybe up to this level, it was something else, but it penetrated, it came in this. So that's why it's called a piercing pattern. Then you will have to wait for confirmation candle. After confirmation candle, then you buy. As easy as that. Stop loss, buy, take profit must be at least 2. It's 2-1. You must risk 1% in order to make 2%. So that when you lose, if you were to take 10 trades and lose 5 and win 5 trades, this means that you made 10% because when you win, you're making 2%. When you lose, you're losing 1%. You made 10% because you won 5 trades. You lost 5% because you lost 5 trades. Then when we subtract your losses from your wins, we'll subtract 5 from 10. Then you made 5% profit. Actually, that's the secret of successful traders. They even lose more than they even lose more than they win, but they still come out with profit. Dragonfly. On a bullish market, then this kind of a candle comes up. On a bullish market is called a gravestone doji. With a small body or without a body, long wick at the top, small wick at the bottom. This is called a dragonfly or gravestone doji. On where? Where? On a bullish market. Then wait for confirmation, then take your trade. This type of candles is what we want to see. There are indicators that indicates to us whether the market is ready to go down or go up, to ready to turn. We don't just buy market. I repeat, we don't just buy because we are seeing the market going up. We don't just buy because you never know when it will turn. This will tell us when the market is ready to turn. On a bearish market, you will see it with a body, dragonfly with a body or without a body. But these types of candles need to appear, then you know that this is a dragonfly candle. Either being alone or many of them, they will tell you that the market is ready to change direction. But they don't always mean that the market will change direction. You can see them and after market will continue going down. Is the reason why we wait for confirmation candle. And again, we use other things to confirm because we want to be more right when we take our trades. Harami. On a bullish market, we want to see this candle being printed either with wicks or without wicks. It doesn't matter. But we want to see it within this candle. We like to call it a pregnant woman. See a tummy here? A pregnant woman. And then wait for confirmation, take your trade. The confirmation can come this way. You can have your confirmation just after this candle below, or you can have your confirmation right being a pregnant woman. This can be a pregnant woman, however, the confirmation candle, then you can buy. Bullish and bearish engulfing. If you are a trader, if you go out, you find a trader, every trader knows about this. The most powerful candle that we use. On a bullish market, we want to see a candle engulfing the last bullish candle, or maybe 2 of the candle, 3. It means that the bears, now they have more power. They are ready to turn the market, right? Then you need to see this candle. How do we classify this candle? This candle, when we slide it in, it needs to feed and leave spaces inside this candle. When we slide it in, we're not going to push it down or up. The way it is, we have to slide it and leave a space above and below inside this candle. This is called an engulfing candle. Engulfing candle is so powerful that we can even take a trade after engulfing candle has closed. Or we can take after confirmation candle. But the way it's so powerful, we can even take the trade after the formation of engulfing candle has formed, right? On a bearish market, this is an engulfing candle with different sizes. Is the reason why we say the way is so powerful. We can even take it immediately after it's closed. After the close of engulfing candle, we can even buy here, because if we wait for confirmation, our target might be smaller than our stop loss. We don't want that. 3 white soldiers and 3 black crows. On a bullish market, you will see bearish candles trying to engulf this candle. The difference between engulfing is that one candle will engulf the whole of this, but here there need to be other candles that needs to come and engulf, needs to support each other in order to engulf this candle. We call those candles three black crows on a bullish market. When they appear, we call them three black crows. After they are printed, you can sell the market. Stop loss, trigger, entry position, and then you take profit. On a bearish market, you want to see them here. They are. They can either appear to this level, or they can even exceed this candle. Then on a bearish market, we call them three white soldiers. They're telling us that the market is ready to go up. Okay? Bullish kicker, or bullish and bearish kicker. On a bullish market, we want to see this kind of a candle appearing. It was bullish, the market tried to push, but the bearish candle appears. It appears at least maybe 50% or maybe above 50%, 50% of this candle, and then kicks down. It can be the size of this candle, or it can be bigger than this candle. This candle can be bigger than that candle. Then we call this candle a bullish kicker. This is what we want to see in order for us to buy the market, to sell the market at this point. There are other candles. If you can see, at some point you will see same candle appearing, but being bearish candle appearing at this point. We call them the tweezers. One of these candles that we might want to see in order to sell the market, wait for confirmation. Okay, on a bearish market, the bearish candle will appear right maybe 50% or below. Then this candle appears. This candle tells us that this candle tells us that the bullish are now taking action. Then we have to buy after this candle close. Okay, guys, I hope you understood that. Please try repeat, do them yourself. Write the names down. Try to draw them on a scribble on a piece of paper. Draw them 5 times, 10 times. I'm sure they will stick. And when they stick, because you need this in order for you to deal with another part that we are going to do, which is price action patterns. Then you will see the correlation there. Please do this 5 to 10 times. Make sure that you know them, you don't miss anything, so that at the end of the day, you don't blame anyone. All you have to do your work, understand this kind of candlestick patterns. There are many of them, but let us focus only on this, because either way, they will pay off. Okay, guys, see you in the next video.